Tell me a little bit about the profitability metric of this business, Rajeev. I mean, if you put your wine business and the wine tourism business together, steady state in a year without disruption, I mean, I'm not talking about exceptional years like COVID, etc. Can it be a 30% EBITDA margin steady state business?
So here you're really pulling me out. You're aware that we closed last year FY22 at approximately a 26% EBITDA margin, which was incredibly strong already. I am not actually going to project that we're going to head towards 30%, but I would not disagree with you that if you took these two businesses and stripped out our third-party brands, actually margins do start tending towards that level. So yes, these are strong, profitable businesses. Today we've become masters of producing good quality wine at a very decent price, and doing that with ever lower and lower manufacturing costs on a per unit basis. So we do aim to. At this point, we're not a low cost producer when you look out at the world, but we're becoming a lower and lower cost producer. So it's very exciting. Margins are going up all the time. And Udayan, looks like you've been doing some of your own financial math behind the scenes.
Where is the real growth coming in from, Rajeev? I mean, your focus has always been, I mean, your stronghold too has been the elite and premium end of the business. I mean, is your foray into the lower end wines only a matter of expanding the category so that people get a sense of wine and slowly start graduating up the rung, up the value rung? And do you see elite and premium really as the major growth driver for you in the years to come?
So I would say first and foremost, the growth driver is our own brands. That's the first thing. 3 years ago, our third-party brands or imported brands was something like 20% of revenues. Today, it's gone down to less than 10%, less than 8% of revenues. So clearly, own brands is where we are focusing, and we're doing that really well. Within own brands, our focus is very much premium and elite. Having said that, ultimately, we're in India. There is a fortune at the bottom of the pyramid. And, being the largest player, we cannot ignore that segment. And definitely, as you say, people taking people on the rung and bringing them up, etc. Also, the fact being we're the masters of wine, we're the masters of making great tasting alcobev out of the grape. And therefore, we want to do that at every price point. And as you're aware, today, Sula dominates every price point, starting at around 250 rupees in Maharashtra, going up to 2,000 rupees for our own brands. Sometimes you have one category growing faster than the other, but I'm very happy to say that elite and premium over the last 5 years have very much outgrown what we call the economy and popular segments. And today is a much larger percentage of our own brands business. So own brands is the focus, and within that, yes, elite and premium. Do we want to continue creating that ladder? Look, the lowest rung, below 500 bucks a bottle is extremely competitive, hyper competitive, and characterized by heavy discounting. So it's not necessarily the slab that we want to play in. We want to play in the more rarefied slabs where our USP is to make a wine that can be on the shelf of a Marks and Spencer or a Waitrose or a Costco across the globe. And today we're giving it to the Indian consumer at a great price. That's where we would prefer to play, in that premium and elite range above 700 rupees.
If you like the video, do like, comment, share and subscribe.